Hello and welcome to San Diego Market Watch, where we bring you timely, accurate real estate information about the San Diego market every single week. It is October the 27th, 2022. We are deep into fall and all the stores are having spooktacular sales for Halloween. So we are in the waning weeks of 2022. So let's jump right in and see what's happening in the San Diego real estate market. The first thing we always look at is the number of homes for sale, which has been declining and declining and declining ever since the end of July. We have had a little uptick here and there, and the past 2 weeks it's gone up slightly. But that really isn't because there's a lot of new listings on the market. The reason that the number of homes for sale has increased is because the number of homes pending and closed has declined. You can see right here, we had an uptick in pendings, which was preceded by a fairly steep downward trend until October 5th when it jumped up a little bit. And that was sort of what I call a non-bounce. It tried to bounce and then it didn't bounce. It started coming back down. So this rise in the number of homes for sale is more related to just homes that aren't selling. So as you can see, the number of new listings has gone down for the last 3 weeks. Of course, as we talk about all the time, it was highest back here in the summertime and then just kept declining all the way through the rest of the summer and fall, with a few minor exceptions. So that's really what's happening on the trend lines here. Let's go ahead and take a look at rates. Oh my goodness. Interest rates are 7.08. That was the average for the last week according to Freddie Mac. 7.08 for your 30-year fixed mortgage does not work with a median home price in San Diego County over $800,000. It just doesn't work. 6.36 on the 15-year and 5.96 on the 5/1 ARM, which is still high. So what do we do about this? Do prices need to come down to combat this situation? Well, prices have already come down quite a bit. It's not really reflected in the month-over-month or year-over-year numbers just yet because prices are still higher than they were a year ago, but that gap is closing, and soon you're going to see the year-over-year number go negative. And that definitely means that prices have come down quite a bit off their peak, maybe even as much as on average. Well, I'm not going to throw out a number because somebody's just going to say I'm wrong. There's going to be a lot of people that jump into the comments and say 20%, 30%, 40%. It's not there yet on average. You can give me hyperlocal examples. I could give you hyperlocal examples where asking prices that are not being met are 20 or even 25 to 30% below the peak closing back in April. But that doesn't mean that throughout the entire market that's what's happening. It's just certain price points are performing differently, etc., etc. So what do we do about rates? Well, there are a number of different things that can happen here to get your 30-year fixed rate down. If your lender is not talking to you about a rate buy down of some sort, you should find a new lender. I can refer you to one who knows all about this. There are rate buy downs. You can do a rate buy down in conjunction with a piggyback loan. If you were planning to put down 20%, you could put down 10 and do an 80-10-10, something to get your loan below the conforming loan limit of, I believe, I want to say it's 870 something. I'm not a lender. But if you can get your loan amount down below the conforming, you have several more options than if you're doing a jumbo loan regarding rate buy downs. And then of course there's the ARM. You could do a rate buy down on an ARM, and you could do an 80-10-10 on an ARM too. And some people might be saying, Eric, that sounds a whole lot like what folks were doing back in the foreclosure days or pre-foreclosure days. And no, it's really not, because those loans back then were vastly different than what we're doing today. Yes, people were doing 100% financing with 80-20 or 3 loans, 80-10-10. There's no real zero down financing right now unless you're a VA borrower, in which case you've always been able to do zero down. There's FHA at 3.5% down, but by and large, most buyers are putting at least 5, if not 10 or more percent down, and that's been the case for several years. So you don't have a lot of people horribly upside down in homes, unless they bought a few months ago. So we don't really have a situation brewing like we had in 08, 09, 2010, etc. Creative financing does not necessarily mean bad. Creative just means you're thinking outside the box, ways to get that rate down, to get your monthly payment down without tanking the real estate market by dropping prices by another 10 or 15%. Because frankly, a rate buy down will do more for you than a 10% price drop will in terms of monthly payment. So, this number has not changed since last week. We talked about this last week, the slight uptick in median prices month over month. This is just indicative of the number of homes that were sold, what price band they were sold in. If a bunch of homes sold, way up in the high price points, this could push it up. One $20 million sale could push that number up. What we have to look at here is the trend, and the trend is down, steeply down, as steeply down as it was up, and that's usually the case. So we kind of have to look back to here, October 2021, when this thing really started to take off. Is this the floor of support here, or are we going all the way back here? That is also possible. Or, some might say we might go all the way back here. We really don't know where the support floor is on pricing. If I had to guess, I'd say we're going back, right here to summer 21, possibly a little further back with regard to this decline here. One of the things that's happening, I'll flip back to this slide really quickly. One of the things that's happening is the number of new listings is going down. Homeowners are not panicking at this point. We don't see a bunch of panic selling going on. There's not a lot of new listings coming on the market. In fact, new listings and closed and pending sales are at their lowest number that they've been, I believe. I don't think you can go back on this chart and find a lower number of new listings in the past week or closed and pending sales. The market is slow. So that's what's happening in San Diego real estate this week. If you enjoyed this, please like, share, subscribe, comment, and hit that bell for notifications of new videos. We do several new videos a week on a variety of real estate topics. And tell your friends, we are looking to get a bunch of new subscribers in the door before the end of 2022. And this is really important to us, our business and our family, so we'd really appreciate your support. Thanks a lot for watching, and we'll see you again next week on San Diego Market Watch.